When it comes to economic news and numbers, this week is shaping up to be one of the most active we've seen in a while. The Federal Reserve's two-day policy meeting, non-farm payrolls report, the health of the manufacturing sector, and the latest measure of consumer confidence. Let's dig in. Before we begin, remember to like this video and subscribe for more economic updates. On Wednesday, the Federal Open Market Committee will conclude its two-day policy meeting for July with an announcement of its decision on what's next for interest rates. Despite improving inflation numbers and some signs of a possibly slowing economy, Fed officials are expected to keep rates where they've been for the last year, at the target rate of 5.25% to 5.5%. As has been the case for months now, it's the Fed chair's post-meeting press conference that's expected to get the lion's share of the attention. Currently, traders believe there's a 100% chance the central bank will begin reducing rates at its September meeting. This week also brings with it several updates on the condition of the nation's labor market. The first of those updates comes on Tuesday, when the Labor Department releases the Job Openings and Labor Turnover Survey, known informally as the JOLTS report for June. The report's expected to show that there were 8 million job openings as of the last day of June, which would be about 140,000 fewer than in May. Overall, job openings are down a little more than 30% from their peak reached in March 2022. Next, on Wednesday, payroll processor ADP will release its National Employment Report for July. Economists expect the report to show that 154,000 private sector jobs were added this month, which would be a slight increase over the number added in June. Then on Friday, the Labor Department will be back to round out the week's jobs numbers with its release of the non-farm payrolls report for July. The consensus forecast expects to see that 177,500 jobs were added last month. As for the unemployment rate, that's projected to come in at 4.1% for the second month in a row. Other metrics we'll be watching this week include the Manufacturing Purchasing Managers Index for July from the Institute for Supply Management. Economists expect the index to come in at 48.5, which would be even with the June number and another month below the key level of 50 that distinguishes contraction from expansion in the manufacturing sector. Manufacturing PMI has landed above 50 just one time in the previous 20 months. Finally, we'll get an update on consumer sentiment this week when the Conference Board releases its Consumer Confidence Index for July. Economists expect the index to measure 99.3, which would be about 1 point less than where it was in June. The Expectations Index, a component measure of the overall index, may be of even greater interest this month than the broader number. The Expectations Index gauges consumers' outlook for the economy 6 months down the road. A reading below 80 is considered a signal that recession is ahead. And in June, the Expectations Index came in below 80 for the 5th straight month. That's it for now. Make sure to join us on Saturday when we go over what actually happened. This is Devlyn Steele for Augusta Precious Metals, signing out.